Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, hope you're having a good weekend. Checking in on the market. Certainly a lot of activity Friday. We had a gap up open. We had a bull break and a daily trend change for the S&P 500. And we had bullish reaction to potential short-term trade deals, or I should say piecing together some cooperation between China and the US. And then at the end of the day, Trump comes out and says, well, nothing's signed and things could change. And then the market just dumped and closed at the low of the day. But all in all, it's a victory for the bulls, and we'll look into the little details of that. There were also some observations, and shout out to member chart gal Lori, who pointed out that there was what appeared to be either institutional buying or stock buybacks. And a lot of people will say, well, we have earnings upcoming, it can't be stock buybacks. Everything that I've read about stock buybacks tells me that it's a very ambiguous rule that is very easy to work around. So in my opinion, stock buybacks could be a possibility as to what is going on, but either way, we know someone big is buying. It could be a large institution, it could be Buffett, who knows. So just as a comparison of what I'm talking about, looking at Facebook on the 5-minute time frame, and I usually watch the 4 and the 8 period exponential moving average when I am trading on the 5-minute time frame. This is the 12 and the 26 period. So let's just change that to the 4 period right now. And when you see the 4 period exponential support hold for the first hour to 2 hours of trading, and it's just a straight move up with no break of a higher low every single candlestick, that's very unusual trading. And that's what I would call unnatural trading. In natural trading, you're going to see the ebbs and flows of some ups and downs when we start the morning with the most volatile part of the day, when there's the most volume. And when you see a move like this, that tells me that there is significant buying pressure to make it an unnatural trading environment. And we've seen this before, and we used to see it on CMG, and this was maybe a year or two ago. We would watch it happen on CMG, where it was the same thing, the 5-minute time frame, just in a straight shot up after the bell rang. And then shortly after, news comes out that Bill Ackman established a large position, and it was very easy for us to say, oh, well, there's putting the pieces of the clues together. We saw something was up. We saw there was unusual, what we call algo buying going on. And then Bill Ackman comes out and says that he established a large position. Well, we watched him establish that large position. And Facebook, whether it's a company buyback, whether it's a large institutional buyer coming in, whatever it is, it's unusual activity that obviously favored the bulls all Friday morning. So S&P 500, we have our daily trend change on SPY with our higher low and higher high. So we've been watching what the most likely scenario is. Since that all-time high, we anticipated a weekly higher low would likely form. We now have that weekly higher low and tightening weekly range. From the past 2 weeks, we anticipated that a daily lower high was going to form on this bounce because we were still in a downtrend and the bounce was significant and still well below the daily lower high of resistance. That played out. Then on the pullback, we anticipated the most likely scenario, due to the size of the bounce, was that a higher low would form rather than just a straight drop to a lower low. We got that, and now we got our bull break. So again, with what we ended the day on with the information from Trump that nothing has been signed, that opens the door and says that we're going to be watching the market react to headlines, whether they're real or fake. The bots and the algos are going to react to headlines for the foreseeable future. And October is going to be a fairly tricky month to trade in my opinion. Number one, because we're in a tightening weekly range, and whenever we're in tightly weekly ranges, the shorter term timeframes are less clear. If we're seeing a daily inside bar form, meaning the day's range is completely within the previous day's range, the 5-minute time frame is often very choppy with a lot of fake outs. We'll see a clear 5-minute uptrend, we'll lose the uptrend, the bears will get no follow through, we'll break to a higher high, we'll drop to a lower low. It's just a much more difficult trading environment when you're in a constricting range. So that tells me patiently wait for weekly clarity before I do anything to get aggressive. Right now, it's time to be more conservative. So we know the headlines are going to continue to be a factor. We know we have earnings season coming up. The banks are going to give earnings first, and then the tech sector into mid-October, late October, and then at the end of October, the FOMC, which obviously has seen some significant reactions recently. Pretty much we've had FOMC pullback, FOMC pullback, We'll see what the next FOMC does. The market is pricing in very high probability of a rate cut, something along the lines of 95, 96% for a rate cut. So when the rate cut comes, if that's what we get, the market has done a pretty good job of mostly pricing that in. We see the biggest reactions in the market to the FOMC when those probabilities are more towards a 50-50. And there was a point in time, a year or two ago, a couple years ago, where that was the case. The FOMC would roll around and it was a 50-50. So when we got a reaction, whatever the decision was, it was a significant reaction because the market was unable to price in the most likely scenario with those kinds of probabilities. We have a very most likely scenario, and we won't anticipate a violent reaction to the FOMC unless we were to get no rate cuts. The biggest reaction in the FOMC, in my opinion, is not whether or not we get a rate cut, unless it's a lack of rate cut when it's very likely. It's the forward-looking statements that then start to significantly shift the probability of the next FOMC. So what does this hourly time frame look like? First, let's look at the sell-off at the end of the day. I ended up playing a bounce here where right on the first pullback, and it was just a way to end the week trading SPXL. I was in the position for literally 15 or 20 seconds, and it was right here where I had a good entry and then sold literally 15 seconds later for a solid 1% move on SPXL before we faded back down. But the bottom line is we saw that big sell-off, which completely changed in the last 20, 30 minutes of trading, maybe even less than that, but it completely changed what the daily candlestick looks like. It's a bearish reversal candlestick right now, a gravestone doji. But if we look at the hourly time frame and how much strength we had, let's take off extended hours just to have some clarity. We had the low of a wick from a news headline reaction. We just dropped real down real quick in the middle of the day, 296.14, end of the day, 296.16. So that's a base of support. It's still an hourly uptrend. Depending on where we open on Monday, we may still be in an hourly uptrend if 296.14 continues to hold. If we lose 296.14, we lose the hourly uptrend, which means zoom out on the daily, and the bulls have tons of space to work with because anything above 288.49 is a daily high or low. So we could see a pullback to start next week of 2% in the markets and still be in a little daily uptrend. But again, I would not be surprised to see things get a little choppy and a little bit less clear as this weekly equilibrium continues to tighten. We have our high, the low, double top, higher low, and anything under 302s will be a lower high. So I would not be surprised, even though we got that daily trend change, I wouldn't be surprised if into mid-October we reject from the all-time high, have to pull back for a higher low in the mid to lower 290s again, and we can easily stay in this pattern through October. So we'll see what Monday brings. That's going to dictate where short-term momentum is, but again, we will look for a daily higher low to form. IWM broke its daily downtrend as well with our higher low and higher high. Anything above 146.11 keeps the daily higher low intact. Hourly time frame with the sell-off at the end of the day, we lost the hourly uptrend. High of the day, hourly higher low, lower high, lower low. So we're currently consolidating on the hourly, which means watch for a daily higher low to form compared to 146.11. There's a lack of resistance, clear resistance nearby if the bulls are able to get over 150.196 and 153.35. Those are the two most clear resistance levels. But again, weekly chart, equilibrium's everywhere. High, low, double top, double bottom essentially, but a higher low. And now we're looking for a weekly lower high compared to 158.92 and anticipating we'll stay within this weekly pattern a bit longer. QQQ, big bull move, got up to the almost near its highs, really almost near its all-time highs. So that's in the picture right now as it is for SPY. But looking at the hourly chart, have we lost the uptrend? Answer is no. We had a higher low at 190.72 middle of the day, and it's still holding at the end of the day. If it breaks and we lose the hourly uptrend, gap fills will be a short-term target, 189.43. So keep an eye on these gaps. Forgot to mention that for SPY. If we do pull back, gap to fill is 294.21. And again, anything on the daily above 185.27 is a higher low for QQQ. XLF got the daily trend change. And again, QQQ's weekly, very clear equilibrium. Anything under 194.71 is a weekly lower high, staying in that range. XLF, weekly equilibrium, very clear. Anything under 28.67 is a lower high. If we break the low of today on Monday, there's a gap to fill at 27.51, and anything above 26.76 is a daily high or low. The healthcare sector got its daily trend change, inverse head and shoulders pattern, where we have a little left shoulder. There's our head, there's our right neckline, right shoulder, bull break. But again, sell off at the end of the day. If we see weakness Monday, gap to fill is 89.51. Anything above 88.10 is a daily high or low. And we're not in a weekly equilibrium. We drop to a lower low, as XLV and XBI are our weakest sectors that we watch. XBI broke resistance of 77.77, but no follow through. That's a double top there. And when we see a daily trend change with a lack of follow through, it means zoom out and watch for a potential bear flag. So a weekly bear flag would be possible on XBI, and the bulls aren't giving us much strength at this point. Bulls must hold 74.55 to try and keep this little daily bounce uptrend intact. So before we get to VIX here, the bottom line is everybody is looking very similar with some differences in terms of the strength of the individual name, but we're watching weekly equilibriums. That is the scaffolding, the bigger picture of what this setup is. Weekly equilibriums all over the place. Even Google, let's just pull up Google. I mean, so many individual names. This weekly equilibrium for Google has been playing out for a long time, since the December dump, essentially, where we've got our low, high. Let's make sure our magnet's working. Higher low, lower high, higher low, lower high, higher low. This has been playing out for 10 months at this point. And we're just waiting for a break of either 11.63 for a bear break or 12.48 for a bull break. And we're expecting that sometime in the coming few weeks. So weekly equilibriums, most important. Other than that, we have daily higher lows and higher highs on most individual names. And we have hourly uptrends on most names, not all of them. If we lose the hourly uptrend, we zoom out and look for another daily high or low, because most names have a lot of space to form that daily high or low and keep that little daily uptrend intact now. When we lose the daily uptrend, our weekly lower highs will be set if we lose the daily uptrend while we're still in these weekly equilibriums. So again, pumping the brakes for me personally as a trader, the tighter we get, and just waiting for breaks of tight ranges. The VIX here, bear break, lower high and lower low. This is the first loss of the daily uptrend since we found a base down at the end of September, and we're looking back down at that level. Surprised we didn't see more of a lower wick of buying at the end of the day. You can see a little bit there, not very significant as far as the daily candlestick goes. Let's see if TVIX is any different. Nope. So what this tells me now with a daily downtrend is anything on the daily under 20.40 is a lower high, and we're looking back down at a few support levels established on the way up. What does it look like on the weekly chart? We've got our low, high, higher low, lower high. It's not a textbook equilibrium, but it is a bit of a tightening range with 1330 is the most important support. So 1330 is the most important daily support, and 2040 is the most important short-term daily resistance to see if the bears stay in this downtrend on any bounce looking for a lower high. So bottom line is nice to have some clarity on the weekly. Again, headlines, you better believe as long as this trade deal is ambiguous and as long as nothing is signed, you're going to see headlines, and you're probably going to see fake headlines again, because we saw how well that worked on Thursday, I believe it was, for whoever, maybe it was Wednesday, but whoever had those fake headlines after hours that didn't end up amounting to much in terms of actual events going on, they were able to profit from that, and they were able to cause bots and algos to react to that headline, and you better believe that they're going to try and do it again at some point. So as always, remain protective, be patient, wait for bigger picture breaks, and we will see you soon. Have a good rest of your weekend.